Let's connect with Harshala Chandorkar, Chief Operating Officer with CIBIL. Harshala, good morning. Thank you for joining us. Let's understand the latest data reading which you have about retail loan payments and delinquencies. CIBIL in the past, I beg your pardon, did raise a red flag that because of lockdown, the retail delinquencies need to be watched out for. Has your concern translated into reality, or is retail delinquency not a concern at all?
Sorry, I'm not able to hear.
Okay, I'm going to ask my PCR if they can just connect the audio. PCR, is the audio connect? Can I go to the guest? Harshala, is my voice reaching you?
Now it is reaching me, but I couldn't hear the question, sorry.
Wonderful, no problem. Good to connect with you. I always look forward to our interactions. When we spoke to CIBIL last, the general view of CIBIL was that the lockdown definitely is something unusual and it could have impact on the retail delinquency. Up until now, we've not seen a large cycle of retail delinquency, but the economy surely has done much better than what all of us thought, let's say a few weeks ago, a few months ago. So what is your trend analysis indicating about retail delinquency?
Absolutely. I mean, as you rightly said, I think the economy, India has done well from a rebound perspective from the lockdowns, what we saw in the early period of the lockdowns, and then a definite trend in June, July, and then now what we are seeing. So we are seeing the retail credit demand as we measure it by the number of inquiries that happen with CIBIL is now back to close to 95% of the 2019 volume. So that's a very, very positive sign from a demand perspective. Specifically going to delinquencies, I think it's a mixed bag, because I think with the lot of schemes that were there, which was the moratorium plus now the Supreme Court announcement for the NPAs, etc. I think early times to really speak about delinquencies. But if we go into specific products, we did see a slight increase in credit cards and LAP, about 54 basis point, 34 basis point for these two products respectively from a delinquency perspective. But we also did see that some portfolios holding steady. So home loan held steady. Auto loan, in fact, saw an improvement, a 23 basis point reduction from a delinquency perspective. But I think we will still wait for a quarter or so to really, see where the delinquencies are going.
When you are referring to the data, you are referring to the November data, or you are also in a position to comment on the December data as well?
So from an inquiries, that's the credit demand perspective, we are referring to the latest November, December numbers. So when I spoke about 95%, it is the December numbers that we are referring to. Delinquencies, when we are referring to, those are August, September numbers, because the latest data is coming in. So those are the August, September numbers that we are referring to.
Okay. When you say demand is coming from tier 2 cities, is it just the fact that we become more digitized and less cash dependent, or there is a pattern at play here?
So I think multiple things here. One is the digitization. So that has really helped. Second, also what also the trend that we also saw is states which opened up earlier from an unlock perspective. We did see an increase in demand coming from those states. Plus, I think the demand for products. So we saw that in early maybe June to August, September, we saw a big surge in inquiries, volumes in the two-wheeler segment. I think that primarily would have been because people were reluctant or hesitant to use public transport. So we did see an increase there. We also did last quarter of 2020, we also saw a good surge in the volumes on the home loan sector, and that could be because of again interest rates being really low, various government schemes. I think Maharashtra government had announced stamp duty reductions, the builders themselves offering a lot of discounts. So we saw the demand coming up there. So I think each portfolio would have a different kind of reason why it's really saw a surge. But I think from an overall level, what we see is home loans, auto loans, two-wheelers, they are really back to their 2019 kind of volumes. And in the initial times, I think in the after the unlocks started happening, rural did see a pickup. Semi-urban did see a pickup, but now we are also seeing the same trends from an urban sector.
When you say that delinquencies have inched up, you're carefully using the word inched up. What could be that number beyond which you would say that inch up has become a bump up and a bump up is a problem?
So I think, from a delinquency, if I have to specifically quote, if I speak about credit cards, where we've seen a 54 basis points increase, it's now at 2.32%. LAP is up 34 basis point, 3.96%. So yes, there is a slight increase. Not worrying at this point of time, but as I mentioned, we had the moratorium till I think about August, September. Plus, we do also have the the Supreme Court judgment order on NPA recognition. So I think we will really have to wait for another quarter to really comment in terms of what's the what are the trends looking like, and are we seeing any risks or anything of those sorts.
Okay, so still waiting on that as well. In terms of credit card customers as well, given that we are seeing some amount of saturation in tier 1, largely seeing a lot of sourcing coming in from tier 2 as well, do you see average spends coming down, perhaps bringing the overall growth down?
I think with the push towards digitization, the push towards cashless transactions, I think a lot of today, the banks, financial institutions have enabled a lot of digital transactions. I think it's become so easy to use your with your UPI make payments. I think it's become convenient. It's become convenient, and those are the trends that we are seeing not just in metros or semi-urban, but those are the trends that we are seeing in other maybe smaller cities, smaller towns as well. So in terms of the usage of these products will continue to increase, and as the consumer confidence also increases, this is something which is going to happen, which is going to happen, because there is a lot of innovation that is being driven. Banks and financial institutions are using or bringing in technologies which will enable more and more of digitization to happen, and that's where we are going towards. So this will only keep increasing.
Okay, which verticals as well do you think we're going to see most growth coming in going forward, and what are perhaps the likes of an ICICI, HDFC doing differently or doing a little bit more uniquely to everyone else in the retail space that makes them slightly more preferred picks?
So I think if I have to speak about which products, I think as I mentioned earlier, credit cards, home loans, two-wheeler loans, auto loans have seen a big jump from a demand perspective as we measure in the inquiry. So that is something that we are continuing to see, and we will continue to see. In terms of personal loans, in terms that is something where we have seen a shrinkage that has happened. And I think if I have to very, very quickly also touch on the MSME segment, I think again the schemes that got launched by the government, whether it was the Atmanirbhar schemes, the ECLGS schemes really gave a boost in terms of lending from that perspective. And again, if I have to speak about the banking sector, I think the public sector bank was the first one which saw the biggest rebound. They were early to commence operations, so we did see again as early as June, July that they were growing from in terms of numbers and in terms of demand that was going to that. Private sector banks have also responded positively. In fact, November 2020 was the first month where we saw a year-on-year higher increase if we compared it to 2019. So they are back with a bang in the 2019 for the 2019 volumes. NBFCs is still picking up. I would say about 60 to 70% of the inquiry volumes that we saw in 2019. So I think it has been really been sectorial.
Sure. Harshala, I'm not quite sure if you have the data, but just wanted to understand something as basic as what are people spending on?
So we do not get information about, if I'm using my credit card, what exactly is it going to be used for? That is not something, that we get, so we wouldn't be able to comment on that.
An issue, Harshala. Great chatting with you regardless, and great to get in all the insight from you on the kind of tractions that you're seeing, and yes, where is it that you're seeing a concentration of transactions really coming in for?